Hello, and welcome to the AgCulture Podcast, where we share insights about the future of agriculture. Each week, we dive into the stories, technology, and ideas shaping a profitable and sustainable future for farms and rural communities alike. I'm Paul Windemuller, host of the AgCulture Podcast, and today I had the honor of interviewing Louisa Burwood-Taylor. Louisa is the head of media and research at an organization called AgFunder. And today we're going to talk about the intersection of innovation, investment, and agriculture. Now, AgFunder is one of the world's most influential agri-food tech venture capital firms. And Louisa is the founding editor for AgriFunder News, which is the leading source of insight and analysis on the future of food and farming around the world. Louisa has an extensive background in financial journalism with experience at the Financial Times, Euromoney, and Reuters before turning her focus to the agri-food sector. She now leads the production of AgFunder's widely read agri-food tech investment reports, shaping how investors, entrepreneurs, and farmers understand the fast-changing world of agri-tech. So there are many facets to this conversation today with Louisa around venture capital, technology, innovation, as well as where the startup world is at today in agriculture and food. So I found this conversation fascinating, really enjoyed it, and I'm sure you're going to too. So please listen closely to this episode with Louisa Burwood-Taylor. Louisa, welcome to the AgCulture Podcast. It's so good to have you on today, and I'm really looking forward to our conversation about investing in the agribusiness and agri-food space.
Great. Thank you so much for having me.
Yeah, so let's start out. You started your career in financial journalism, correct?
Mm-hmm, that's right.
What made you transition now to your role at AgFunder from financial journalism? Give a bit of context around that.
Yeah, absolutely. I mean, it's one of those things that's sort of serendipity, but I was covering financial markets like bond markets, equity markets. I lived out in Hong Kong for 3 years, covering the public stock exchange and IPOs and listings and so on. It was very exciting. And I moved back to the UK with my now husband, and I was kind of looking for what my next role was going to be. And this media company that covers private markets investing was looking at creating a kind of department of niche areas for investment. And one of those was agriculture. And so I was the founding editor of AgriInvestor. And honestly, as soon as I lifted the lid on this industry, I was hooked. It was way more interesting than anything I'd written about before. I was writing about all these deals that were kind of the same thing, just a different name. And suddenly there I was immersed in the natural world and learning every day. And now we're at 12 years later, still learning every day. So that was in 2013. And then I joined AgFunder a couple of years later. Awesome.
And what was the big reason for AgFunder, going over to AgFunder from there?
Yeah, so when I started AgriInvestor, we were looking at all different types of agriculture investment. So a lot of what I was writing about in the early days was actually investment in farmland. So there were various funds that were investing in farmland, various different individuals that were investing in farmland. And then there was this kind of small Agtech piece of it that was gathering pace. And in 2015, it was kind of seen as this breakout year. There was about, I think I remember the numbers, $4.8 billion of investment or something, which is still very small, but at the time it was huge. And I knew the guys from AgFunder, Rob Leclerc, Michael Dean. I'd chatted with them before, I'd covered them, and I just loved what they were doing. They were very dedicated to catalyzing more money into the space and to educating people about the opportunities in food and agriculture, not just from an investment standpoint, but also from a technological standpoint. It was and probably still is the least digitized industry in the world. And they felt very passionately about changing that. And as I said, I'd come into this world and absolutely loved everyone I met, was really, really enjoying it. And so I was excited to go and work for them. I was still based in London at the time. They were based in San Francisco. So we had a time zone situation, but we've always made it work. And haven't really looked back.
For those who haven't heard about AgFunder, could you describe it a little bit in more detail and what the platform is all about?
Yeah, absolutely. And it's been quite the journey. So as I said, I've been there for 10 years now. This is my 10-year anniversary this year. And it was founded in 2013. And really the mission was always to bring funding and technology into food and agriculture. The business model behind that, took some time to really develop, but we always had AgFunder News from the start as this educational tool. So I was writing the news just like anyone writes the news, like a tech crunch for agriculture type thing. Meanwhile, Rob and Michael were developing what now has become a venture capital firm. So we raised our first fund in 2018, and we raised that fund really from our followers and our fans and our subscribers. It was a very small fund. It was $2.5 million. And you had some executives at large food and agriculture companies or banks. You had successful entrepreneurs coming in. And it was a really awesome sort of grassroots thing. And then since then, we've scaled that. We now have about $300 million of assets under management across about 7 different funds. We have an office in Singapore. We ran an accelerator program. Accelerator program is where you have startups come through and you help them to find new customers, find new investors, and so on. We have an impact fund that's also managed out of Asia. We now have a European growth stage fund for like later stage startups based out of here in London. And so now, we're a VC firm with a very prolific media arm, I would say. And there's another thing that makes us somewhat unique for a VC, in that from the early days, around the time when I joined, we hired Robin Chawan, who is an AI engineer. So he has been building this technology platform for us internally to use, which utilizes some of the research that we do on the funding reports and so on, which we might get into in a bit. Use that as a starting point to really start to map the universe of agri-food tech. And this platform that he's built can assist the deal team to identify interesting startups they might want to invest in, do competitor analysis, but also as a benefit and an additional benefit for our investors as well to use. So we have this sort of flywheel effect where the media, the engineering, and the venture all kind of work together.
Yeah, and it's very well known in the agriculture space. I know I've been following AgFunder news for probably 8 to 10 years now. I've really enjoyed the work that you guys are putting out, and that's kind of helped pique my interest in the agri-tech space and get more involved in that. So appreciate the catalyst you guys have been in that.
What were you doing before?
I'm a dairy farmer right now. I've got a dairy farm.
Yes, right. So you were got you interested in the tech, right? Gotcha. Yeah.
But I'm always curious about things in agriculture, and usually I've invested quite heavily in technology on our farm here and automated a lot of things, and now have a role in consulting as well with a couple of different ag tech companies and startups in the U.S. here. So that's been a fun thing, but definitely stimulated a lot of that interest and curiosity from reading the articles that you guys put out. So,
well, that's great. And that was always the intention. And I think, we've got just such an amazing network all across the world. And we just hope that we can continue to add value. And, the industry has shifted so much in this time in terms of what are the hyped up areas? Where is the interest from investors, from farmers, from food companies? We're going through a somewhat challenging period right now, along with many other categories, but I think particularly food and agriculture technology.
It seems like the last 12 to 18 months, a lot of the interest and hype in the food and agribusiness space has really dried up in especially from the investor side. But there are companies in that space. I had one on the podcast here about 3 or 4 months ago that just hit kind of the unicorn status, as we call a $1 billion startup company in valuation. So there are companies that are doing really well in this space at this time and are raising money, but it seems like across the board the interest level has sort of slowed, and the investments definitely slowed as we've seen by the numbers. So what happened there to cause that, and what is making some of these companies still successful despite of that?
Yeah. What was the company that you're referencing?
Halter.
Oh, amazing. Yeah. Wow.
Yeah.
That's super exciting. Yeah, exactly. Yes. So, I mean, we are at a point where overall venture capital has been in decline. So this has happened across the industries ever since that peak of inflated expectations in 2021. So a ton of cheap money coming into the space and a lot of hype around certain categories. I'm sure I'm probably not telling anyone anything new when I say that those categories were indoor farming, alternative protein were the sort of most hyped up areas that at one point were, the darlings and the poster children of our industry that got the general public to show some interest. When I told friends and people I met what industry I'm in, they're like, "Oh, you mean like lab grown meat or vertical farming?" I'm like, "Yeah, okay, yeah, sure. It's not just that, but and then unfortunately, with all that hype and a misunderstanding around the growth cycle for those products and technologies, the unit economics, the demand, that hype kind of fell flat. And a lot of what we now kind of call tourist investors have left the space. So it's a combination of hype and overinvestment with overall market downturn for venture capital. And there's probably an additional thing that has been the elephant in the room for a while, but I think people are talking about it a lot more now, in that we just haven't seen the number of exits. The startups have just not been getting acquired in the same way that we thought they would. So when I started, whatever it was, 12 years ago, the assumption was that the big food and agriculture companies would be buying startups. And we obviously had the Climate Corporation acquired for nearly $1 billion. And everyone thought, great, this is going to happen a bunch of times. And that hasn't.
Do you think that that's not happened because the life cycle or company scaling cycle is very different in agriculture and food than it is in software and those type of industries that the investors pool usually is used to seeing?
Yeah, I mean, I think that's absolutely a contributing factor. So there's a few different things at play. The cycle is challenging, and again, we all know about crop cycles being once, maybe twice a year, and the iteration cycle for technology being a lot longer term. And so that's one thing where, the startups have not been able to show the value in that time frame to then create a value proposition for an acquirer. I think the food and agriculture companies the agriculture companies were very distracted with their own M&A. I mean, they were not in a good shape themselves. Food companies have some very thin margins. The industry overall does. So I think that was not really thought out in the early days. And it's a combination of those things, really. And I do also just think there's been quite a bit of defensive activity from some of the food and agriculture companies trying to do a lot of stuff in-house. Plant-based proteins is a case in point. Many of them decided to make their own products in-house as opposed to acquiring a company, and that's fair enough. But I think we probably thought it might be more akin to like the healthcare industry, where they're very acquisitive of startups, bringing in real IP and technology. And maybe that speaks to the fact that some of that plant-based stuff really didn't have that much of a IP and technology to acquire in. So yeah, I mean, it's a real confluence of factors.
So how does that change moving forward then for startups to want to grow and continue to progress and create new things?
I mean, there's a lot of talk, and there's some great thought leaders who speak about this far more eloquently than I do, but there's a lot of talk around having different types of capital, like changing the sort of capital stack for some of these companies. You can build a really good company and it can be successful. It's just not suitable for venture capital. And I think, you need to potentially separate those two things. And who can those investors be, where you're building a solid business that either maybe it still does become $1 billion company or something, but it takes 20 years to get there, or it just becomes a really solid business that's adding value and is just not, a household name like, the large tech companies are. And that's what VCs, when they're investing, competitively minded VCs, for each investment they make, they are thinking that investment can return the fund. It needs to be a blockbuster, and they need to have that conviction that is possible. But you could also have some really great companies. So that's one approach. And whether those investors are from the industry, or it's like, family office type investors, or more patient impact funds and private equity companies, that remains to be seen. And it's probably a mixture of those things. If you are more of a competitive VC as such, or a VC looking for competitive returns, which we are AgFunder, we want to have big impact and be competitive in terms of returns. We're taking a slightly different approach, where we're now investing more in deep tech and deep science, in platform technologies that can unlock bottlenecks to food and agriculture progress. And what that can mean is investing in companies that are at the cutting edge of deep tech innovations, specifically stuff like AI, material science, biotech, robotics. And that those applications are not necessarily being created specifically for food and agriculture. It's a platform. So we can then be the food and agriculture partner that brings these technologies into the industry. Because also one of the other things that's, has been going on is, while there has been, there was a fantastic surge in interest in food and ag tech, it's still not like, if you are like one of the brightest minds in engineering and technology and whatnot, it's often not the first place that you think you're going to go and be able to build your $1 billion startup. You're going to go into energy, defense, healthcare, etc. So we want to find the best technologies. We want to find the best people, and so now we're trying to do that in more broader application related technologies. So we've done that with a couple of companies in our portfolio. We have a company called Atenary that is a no-code AI platform that's accelerating chemistry R&D or material science R&D, and they could do that by 100x. So they actually replicated an experiment out of a Swiss university that took 100 years, and they were able to do it in 6 weeks. And essentially I wouldn't be able to explain how they're doing it, because I'm not an engineer, but they're actually helping you predict like what experiment should come next. Like where should you experiment next, as opposed to literally doing, the sort of typical scientific way of trial and error and so on. So they're working with pharmaceutical companies, energy companies, but they've also worked with food and agriculture companies. And that could be on finding a new formulation, a new recipe for food companies, or in agriculture, finding a new molecule or a new biological, and so on. So they're fantastic. And again, as I said, a lot of these companies won't have any link to food and agriculture. And so we've been able to add value by making introductions to, our broad network.
Well, that makes a lot of sense. And
did I explain that well?
Yeah, I think that's really well explained, because you look at, I just think to Henry Ford and the amount of people that he actually influenced in agriculture that talk about how, I know like Sir Nuffield in the UK, I'm a Nuffield scholar, and kind of his history, the gentleman that started that foundation, came over to the US and learned from Henry Ford about production systems. And that was one of his light bulb moments in his career. And he came back went back to the UK, started his car company and his tractor business, and built those out to be huge players in the market in the UK. And I think taking what is unique and the new thing in one industry and trying to figure out how to adapt it to another sector, another industry, is a great way to get innovation rolling in, especially an industry like agriculture that's been around since the beginning of really human existence.
Yeah, I mean, let's think about some of the sort of game-changing tools and technologies in agriculture. GPS.
Like a GPS. Yeah, that's a great example.
That was definitely not created for agriculture.
Yeah, it was for the defense system when it came out.
Absolute game changer, 100%. And then, what about drones? Like, what's the biggest drone company in agriculture? DJI.
Yep.
I mean, I don't know what's going to happen with that now with the America-China situation, but that's the most used drone company in agriculture, right?
Yeah.
And that's certainly, again, because what they were focusing on is making it as efficient as possible, the battery life and all those kind of things. They weren't trying to over-optimize for agriculture in the first instance.
No, those are great examples. What, so you guys are at the crossroads between data and capital and telling the story of food and agribusiness. What are the gaps between what farmers and food companies actually need and the tech that's actually getting produced right now, or that's startup companies are working on?
I mean, you probably know better than I do on this because you're the farmer in the conversation.
I've seen some examples, definitely. You can definitely tell when somebody did not do their homework and ask some farmers about how to apply their technologies. Right.
I mean, this is a slightly age-old thing that everyone's saying now is that, you just need to really go and speak to farmers before you're creating a product. We have a company in our portfolio, Verdant Robotics. Do you know them?
Verdant. Yep, I've heard of that. Yep.
Yeah, they spent a year speaking to farmers before they wrote any lines of code, and they're doing really well. That is a category that seems to be actually doing really well now, having gone from being a lot of promise and not much sort of efficacy. It's very, very exciting, and I think it really comes down a lot to that. Yeah, that making sure that they were speaking with the farmer from the very beginning. I mean, everyone's just sort of slapping AI onto stuff, aren't they? Or they're saying they're slapping AI on. And that's actually something that I'm really interested in doing some discovery on myself in terms of my own sort of reporting and journalism is to dig into what is the role of AI in food and farming, where is it needed and where is it missing? My overall hypothesis is that the food and agriculture industry is still being left behind digitally, technologically, and artificial intelligently, if that's the word. I think there's probably a lot more that could be done to integrate it and create efficiencies. We have been speaking quite a bit with food companies recently, and many of them are just at the start of their own digital transformation, where they're actually upgrading their internal systems to use more AI to create efficiencies across the supply chain. We have a company in our portfolio called Lumi AI, and they have been, really doing well, speaking with a lot of CPG companies about how to integrate their tool, which can help you to identify inefficiencies in the supply chain, such as maybe leakage in procurement or inefficient logistics. This supplier is always late on this or that, and there's ways to actually really impact the bottom line, like the P&L. But it's been a tough conversation to find the people in the business who are responsible for that, because often it will come from the leadership. It's not like the IT department. Of course, this is the strategic thing. It involves finding all the often disparate data sets across a whole business and being a layer on top of like whatever platform they may have. And to date, you need a data analyst to write some Python code to create a dashboard for someone to help them to identify where they might be finding leakage and what, there's various other examples. So there's still quite a long way to go in terms of that. However, there's also just, saying that something is, AI dog food or, there's like really silly gimmicky things. And I think as investors, people really need to be looking at these companies and determining, are they just adding a bit of a chat GPT function here, or is there some true engineering going on in the background? And that, that can be tough, but if you have the right expertise on your investment team, we luckily have, a couple of engineers on our investment team. So they're good at kind of digging in and spotting that.
I've seen several companies that touted themselves as AI companies, and you really look at what they're doing, and all it is a couple of simple algorithms that they're running in the background that they're running the data through. And it's like, that's not, in my mind, that's not really artificial intelligence. can be a helpful
Yes.
tool.
It's data analytics.
Right.
I
It's
guess.
simple data analytics. And I think that's giving a bit of a bad name to the people that are actually trying to develop intelligence, not just a specific statistical algorithm. So that's one thing that I've been frustrated by a little bit, but I've actually, my net field topic that I'm working on is artificial intelligence in ruminant livestock. So I'll have to send you my paper when I'm done with it.
Oh, how exciting. Yes, I'd love to talk more with you about that. That's awesome. I mean, how are you using AI in your operation?
For me, we've I'm do a bit of research, paid research on our farm as well. And right now we've got a company that developed a predictive model system utilizing AI for feeding cattle. So they train data sets with the model, and then on specific feed ingredients, take DNA samples from the rumen of the cows, and then look for biomarkers to identify in cattle when the feed additive actually works, and then they make correlations with the AI modeling system to be able to predict how that's going to work in other livestock herds based off of what their DNA sequencing is.
Awesome.
So that's been really interesting to be a part of that project. And we're actually 2 days ago, we just wrapped that initial project up on our farm. And it was quite fascinating how accurate it was. I was pretty excited about that technology, but and that's one example. We've got a whole software platform that we use for our robotic milkers. You've probably heard of Lely. So that's what we have on our farm.
Yeah, brilliant.
And they've really ramped up, going back to that statistical modeling system. They've gone from that to now more intelligent modeling of when cows are in heat, when cows are sick, those type of things. So, and then making, for me, as a farmer, that's all well and good to have that information. But when I've got so many things going on in a day, I want to now take that information and just have it give me actionable insights. Like, okay, this cow, this cow has these parameters that make it look like it's sick. Now let's take that one step further and say, okay, we think it's probably sick. Based off those parameters, what are the most likely? What are the highest likelihood of different diseases that she might have or issues that she might have? And then also based on the severity of that, what treatment protocols would be most effective? That's where I want to get to as a farmer, because that's two or three less decisions that I have to think through and make in a day.
It must be close, though. It must be getting close to be able to offer you that.
I think the big bottleneck right now is the liability. They're afraid to take on that liability of a vet.
Yeah.
So there are some roadblocks to it. Those are the type of issues that I think we need to flesh out legally. Right. And
maybe you need to subscribe to a vet agent.
Yeah. I think that's where it's going.
Like you need to take that responsibility off it, right? You say, right, yeah, I'm going to subscribe to this vet agent. It's an app that's added on or something that takes it off Lily's plate and gives it to you.
So I think that's probably a great opportunity for a startup AI business.
Yeah, come on, guys. You heard it here first. I'm sure there is something out there. You're going to get loads of calls now.
I'm sure. Let's talk a little bit with the few minutes we have here left, a little bit more about the research that you guys do. I'd really enjoy hearing more about that.
Yeah, great. So we do these, annual global agri-food tech funding reports. And over the years, we've also dug into different parts of the world. We've done country and region specific reports. And then this year we started a new developing markets report. You will notice in the trends that a lot of developing markets, the trends are similar for investment. And oftentimes that's because the farming industries have similar demographics. Typically, a lot of smallholder farmers with very small holdings. And so it's been interesting to kind of split those things out. And we've noticed as investors, generally you have developed market investors and emerging market investors. Actually, at AgFunder, we do all of it. But, overall, you do that. So I think it made sense to make that separation as opposed to having stuff on regions. Anyway, I'm getting into too much detail about that. You're not interested in that. But in terms of like the insights, I could give you a link to the report so some of your listeners can have a look. But we're down to $16 billion of investment in 2024 from a peak of 56. The number of deals is down. Early stage, like investment activity, has been decreasing as well, which I often think is slightly concerning. But there were some sort of bright spots as well. In developed markets, there was an increase in investment in the US, in the Netherlands, and Finland and Japan, and then Japan. So they all had actually an increase in investment. And there are some pretty big developing markets like India, which continue to grow.
With that research, do you think it's because there's less startups that are asking for money, or is it because certain startups are going to what we talked about previously, looking for other models besides venture capital that's driving some of that?
It's the startups have failed.
They're just, but there's not new ones replacing them.
Often not. I mean, there was actually quite a surprising statistic. I was looking at this earlier. Hang on, let me see if I can find it.
I guess the question is that a bad thing if you're having startups not start up that potentially wouldn't be worth having anyways?
Yeah, so if you look at seed stage funding activity in the US, it was actually kind of interesting because there were some categories that had an uptick, like farm robotics, ag marketplaces. There was a downturn in ag biotech, which is usually kind of the biologicals area. So that's kind of a strange one. And farm management software was pretty flat. So, there are signs of recovery in various places. It can be really hard to determine trends because, the deal numbers are quite low as well overall. And, you often have large deals that can skew things and so on. But it was a good sign that the US had recovered a bit. Typically, I think in venture markets, Europe can often be a little bit behind the curve of the US. So we might see a bit more of a decline in Europe this year, potentially. What else can I tell you about the report? I'm just having a think. What else is helpful? Let me just have a look at the categories because that's quite interesting. So something else. So overall, what has been a really good, interesting trend, especially for you in the past few years, is that when you look at upstream and downstream investment, the upstream investment has increased as like an overall portion of the pie. So now the majority of like agri-food tech investment, which is farm to fork, goes upstream into farm tech and food production. And that's still the case, but every single upstream category declined last year. The sort of smallest decline was farm robotics, which is only 2%. So farm robotics has actually been the steadiest category for investment, and it has crept up around 9-10% or something over the last couple of years. And I think that's really interesting because if you think of it as a farmer, one of the tools that you're using, I think robotics really are, working out in many cases now. You have a few companies, as I mentioned, Verdant, I can't remember, there's various others that are literally selling out as soon as they have equipment on the market. It's being purchased or leased or whatever. So I think that's an awesome category, and that's great to see that. But you've seen, I mentioned the biotech decline, marketplaces, indoor agriculture, obviously, that's down 53%. So what was kind of surprising, that's what the downstream stuff actually had, all the downstream categories had an increase in investment. I mean, I really don't know how many more online restaurants and restaurant marketplaces we need. And quite a lot of retail and restaurant robotics and so on. There's been an increase there. But yeah, I don't really know what the reason for that is.
On the robotics side, I'm curious to get your take on humanoid robot use in replacing, that type of workforce, the workforce that's really hard to get, especially in developed countries like the US, UK, where there's jobs that people just don't want to do anymore, but that still need to be done. Like I have milking robots because a lot of people don't want to milk cows anymore. So do you see more of an interest in that from investors looking into those type of robot systems that are not specific for one use, but multi-use, almost humanoid type robots?
I haven't actually really seen much there. I think at this point it's just looking at the kind of capability. You see those robots from China that can do kung fu and whatnot. But I think everyone's like, robots are coming for our jobs, and they are. But as you say, in the first instance, they're coming for the jobs that no one wants to do. And there's a huge labor shortage in agriculture across the globe. And that's probably why that category is doing so well, because farmers have been struggling.
A lot of those robots are built for a specific use, right?
Yes.
Milking or weeding or those type of things. They're not multi-use robots.
Yeah, exactly. Do you want an army of humanoid robots on your farm?
I don't know about an army, but if I had one or two, I was just thinking through that the other day, because I sit and think sometimes about really random stuff. And I thought about like what could, and this idea popped into my head after I was in an apple orchard in New Zealand. They equipped their sprayer with all these camera technologies, and then they purchased the software program that allowed them to do coloring and counting of the apples to see if they needed to thin them or anything like that. And it was they were performing very high level management tasks, doing a mundane thing like spraying. Every time they went through the orchard to spray, it took that data, and they were able to, usually the farm manager, the orchard manager would be the one to do that. And it would take a long time for them to be able to perform that task and then think through, okay, what are we going to do now? And I was thinking about that is if you have robots on a dairy farm in specific, if you're walking around, if a humanoid robot's walking around doing a mundane task, but they're also the data collection system, another sensor to be able to collect data to see, how are the free stalls? Do they need to be rebedded? There's this item here that needs to be fixed that's broken. This gate's broken, or just taking all those things and actually take in what a good farm manager would as it's doing a mundane task, and then being able to bring that data into the farm management system that they're on.
Yeah, that's great if you can integrate the different tasks.
Yeah.
As opposed to having various different data collection methods, drones or cameras around the farm and so on. Yeah. That's awesome. I mean, I just want a robot to kind of stock my fridge, maybe take the dog for a walk occasionally, that sort of thing.
Maybe another 5 years, right?
Yeah, exactly.
Well, Louisa, I know you got to get going here soon. So just want to say thank you for being on. Really enjoyed our conversation, and hope to stay in touch in the future.
Great. Thank you so much. I hope it was useful.
And thank you once again for listening to this episode of the AgCulture Podcast. Really appreciate you listening and being here for the whole episode. Once again, if you want to find out more about AgFunder and the work that Louisa is doing, we'll have some links for that in our show notes. Check those out. And as always, if you have a unique story that you know of in agriculture or the agri-food, agri-tech space, we would love to check that out and see if it's a fit for our podcast. So reach out to us. LinkedIn's usually the best way to do that. And as always, if you could share this with somebody that you know, we really appreciate that as well, to spread the value that we're trying to create through this podcast. With that, we will see you next week for another exciting episode of the AgCulture Podcast.